In this session we going to learn about income under the head of salaries. Section 15 to Section 17. Do subscribe to my channel for more informative video. Like my video, it encourages us to make more videos in future. Condition for charging income under the head of salaries. Income is taxable under the head salaries only if there exists employer and employee relationship between the payer and the payee. Features of employer and employee relationship. Point 1. Contract of services, salary, versus contract for services, profit and gains from business or profession. Point 2. Master-servant relationship. Point 3. Direct supervision and control of the employer. Point 4. It is distinct from principal and agent relationship. Clause 1 of Section 17. Salary includes wages, any annuity or pension, any gratuity, any fees, commission, perquisite or profits in lieu of or in addition to any salary or wages, any advance of salary, any payment received in respect of any period of leave not availed by him, that is leave salary or leave encashment, the portion of the annual accretion in any previous year to the balance at the credit of an employee participating in a recognized provident fund to the extent it is taxable, the aggregate of all sums that are comprised in the transferred balance of an employee participating in a recognized provident fund to the extent it is taxable, the contribution made by the central government or any other employer in the previous year to the account of an employee under a pension scheme referred to in Section 80 CCD. The contribution made by the central government in the previous year, to the Agni Veer Corpus Fund account of an individual enrolled in the Agni Path scheme referred to in Section 80 CCH. Instances where employer and employee relationship exists or does not exist. Director of a company. In the case of a director of a company, employer and employee relationship cannot be presumed but should be ascertained based on the service agreement, if any, executed or the articles of association of the company. MPs and MLAs. The CBDT has issued instructions that salaries of MPs and MLAs member of legislative assemblies is not chargeable under the head salaries, but it is chargeable under the head income from other sources since there is no employer and employee relationship between them and the government. Paper setters or examiners. Where a teacher of college receives remuneration for setting question paper for examination or works as an invigilator in university, then the remuneration received by him will be taxable under the head income from other sources. Judges. It was held that what the judges receive is salary since there is employment as created by the Constitution of India. Basis of charge. Section 15. The following income shall be chargeable to income tax under the head salaries. Salary due. Any salary due from an employer or a former employer to an assessee in the previous year, whether paid or not. Advance salary. Any salary paid or allowed to the assessee in the previous year by or on behalf of an employer or a former employer though not due or before it became due to him. Arrears of salary. Any arrears of salary paid or allowed to assessee in the previous year by or on behalf of an employer or a former employer, if not charged to income tax for any earlier previous year. Additional notes and amendments. Salary chargeable to tax either on due basis or on receipt basis, whichever is earlier. Accounting method of the employee is not relevant. Deduction under Section 16 Clause 2 and 16 Clause 3 would not be available in case of an employee, being an assessee, who is paying tax under the default regime, that is under Section 115 BAC. Standard deduction under Section 16 Clause IA is increased to ₹75,000 if the assessee pays tax as per default tax regime, that is Section 115 BAC amended by the Finance Act, 2024. Tax treatment of different form of salary. Advance salary. Salary can't be taxed twice, that is where any salary paid in advance is taxed on receipt basis, in the year of receipt, it can't be taxed again on the due basis, in the year in which it becomes due. Arrear of salary. Arrear of salary received by an assessee is charged to tax on receipt basis, if it was not taxed earlier on due basis. Salary to partners. Any salary, bonus, commission, or remuneration received by a partner from his firm is taxed as business income and not as salary income. Fees and commission. Fees and commission paid to an employee are taxed as salary income. Overtime payment. Overtime payment is a taxable salary income. Annuity. As per the definition, annuity is treated as salary. Annuity is a sum payable in respect of a particular year. It is a yearly grant. If a person invests some money entitling him to series of equal annual sums, such annual sums are annuities in the hands of the investor. Annuity received by a present employer is to be taxed as salary. It does not matter whether it is paid in pursuance of a contractual obligation or voluntarily. Annuity received from a past employer is taxable as profit in lieu of salary. Annuity received from person other than an employer is taxable as income from other sources. Bonus. Bonus is taxed in the year of receipt, it is not taxed on due basis. Salary from UNO Section 2 of UN, Privileges and Immunities Act, 1947. Full-time or part-time employment. It does not matter whether the employee is a full-time employee or a part-time one. Once the relationship of employer and employee exists, the income is to be charged under the head salaries. Foregoing of salary. Once salary accrues, the subsequent waiver by the employee does not absolve him from liability to income tax. Such waiver is only an application and hence, chargeable to tax. Surrender of salary. If an employee government, public sector unit, private surrenders his salary to the central government under Section 2 of the Voluntary Surrender of Salaries, Exemption from Taxation, Act, 1961, the salary so surrendered would be exempt while computing his taxable income. TDS on salary. As per Section 192, every employer has to deduct tax on the taxable salary of his employee if such salary is more than the basic exemption limit and hand over the net salary which is after TDS, to the employee. While calculating taxable income of employee salary before TDS has to be taken and not the net salary after TDS. Salary paid tax-free. In this arrangement, the employer bears the burden of the tax on the salary of the employee. In such a case, the income from salaries in the hands of the employee will consist of his salary income and also the tax on this salary paid and bears by the employer. However, as per Section 10 cubic centimeters, the income tax paid by the employer on non-monetary perquisites on behalf of the employee would be exempt in the hands of the employee. Loan or advance against salary. Loan is different from salary. When an employee takes a loan from his employer, which is repayable in certain specified installments, the loan amount cannot be brought to tax as salary of the employee. Similarly, advance against salary is different from advance salary. It is an advance taken by the employee from his employer. This advance is generally adjusted with his salary over a specified time period. It cannot be taxed as salary. Place of accrual of salary. Salary earned in India is deemed to accrue or arise in India even if it is paid outside India or it is paid or payable after the contract of employment in India comes to an end. Pension paid abroad in respect of services rendered in India and leave salary paid abroad in respect of leave earned in India is deemed to accrue or arise in India. Salaries payable by the government to a citizen of India for services outside India shall be deemed to accrue or arise in India. Foreign allowances by the government employer. Section 10 subsection 7 is exempted. Any allowance or perquisite paid or allowed outside India, by the Indian government to a citizen of India, for rendering service outside India is fully exempt. Some examples for better understanding. Example 1. If an employee gets pension paid abroad in respect of services rendered in India, the same will be deemed to accrue in India. Similarly, leave salary paid abroad in respect of leave earned in India is deemed to accrue or arise in India. Example 2. A citizen of India is posted in the United States as our ambassador. Obviously, he renders his services outside India. He also receives his salary outside India. He is also a non-resident. The same will be deemed to accrue or arise in India. Profits in lieu of salary. Terminal compensation. The amount of any compensation due to or received by employee from his employer or former employer in connection with the termination of his employment or the modification of the terms and conditions relating thereto. Usually, such compensation is treated as a capital receipt. However, by virtue of this provision, the same is treated as a revenue receipt and is chargeable as salary. Payment from an unrecognized provident fund. Any payment due/received by an assessee from unrecognized provident fund or other fund to the extent to which it does not consist of employees' contributions or interest on such contributions. Payment under Bcom insurance policy. Any payment due to or received by an assessee under a Bcom insurance policy including the sum allocated by way of bonus on such policy. Any amount, whether in lump sum or otherwise, due to the assessee or received by him, from any person, before joining employment with that person, or after cessation of his employment with that person. Any other payment, due to or received by an assessee from an employer or a former employer or any fund other than the payments exempt under Section 10.